Okay, guys. Today we are going to be talking about SMC entry models. Very, very, very important. There are different models we have in SMC, and it's very important that as traders, um, if you are new trading SMC, and you need to also know that there are different kind of entry setups that are still based on SMC concepts, which is the liquidity and after the liquidity sweep continuation. You know what I mean? Okay, so there are different aspects, so that in case you're now going through the charts and you're just seeing looking for one particular entry model, then you see another entry model and you do not know, you would have missed a trade, but it's a wonderful SMC setup that just played out, but you actually missed that particular setup. So I'll be doing talking about different entry models, and this is one of them, right? Where you have markets making sweeping a low, a previous low, right? Something like this. Okay, market sweeping a previous low, making this low protected, right? You have a sweep here. It might be an internal structure sweep, right? Sweeping a low, creating a break of structure. Maybe at this point you will just see one break of structure to the upside. Okay, it's usually, you see this kind of setup, usually a continuation setup. Maybe the market is bullish, then market retreats, comes back into discount levels to continue buying upwards. Okay, not, they have two entry setups. There's one where the market is actually bearish, then all of a sudden market reverse and turns bullish. But for this particular setup, this entry model is one which is a continuation setup. Okay, then market makes a sweep of a previous low right here. You can see that very clearly. Then all of a sudden you now see an impulsive move with a break of structure to the upside. Now it will give an impulsive move, the break of structure. You see no form of imbalance, no form of inducement, structural inducement or engineered liquidity here, resting here. All that will be here, it's an FVG, a fair value gap for this impulsive move, right? After market creating that impulsive move, creating this fair value gap, then there's no, so you might be looking for this particular entry model, this one that you've been taught several, you may be looking for this one now in order to take a buy, but the market is not playing out like this, and you don't know that, oh, there are other models in SMC that you can trade, and you're just looking at this and you're looking at seeing something like this, you would not know how to take a trade. Okay, so now on this particular setup, the market will now start coming down in a bearish manner. It happens on any time frame. If you even see this on higher time frame beautifully, lots of people will be trading what, this bearish trend line. A lot of people will what, trading this bearish trend line. You can see here the market is actually following what, a bearish trend to the downside, right? So at that point, everybody will be looking at the market is bearish and all, you'll be taking this bearish shot. But what is the market doing while creating this bearish move? It is creating what, trend line liquidity. Creating what, trend line liquidity. So now when the market makes that impulsive move to the downside, two kind of traders are available in SMC. We have the aggressive traders, those one who do not wait for confirmation. They take their trade at a particular POI they believe will hold, right? While we have confirmation traders who are very patient, we wait to see if a particular POI, now this is your POI, point of interest, to see if a particular POI will actually hold before taking their entry. Okay, so for this now, immediately after this trend line, a touch on this, then market taps into the trend line, then all of a sudden goes to tapping from this POI, goes ahead to tap the trend line, then suddenly breaks it. So what you now see is market has broken out from this bearish trend line that started this reversal movement. So here you have a what, this was the previous low that went to the POI when price rejected from. So you have a beautiful market structure shift here. So an aggressive trader would see, right, would see the FVG, the impulsive move, and they will go ahead and take their buy position right here. Okay, they will go ahead and take their buy position right here, put their stop loss below, and they will long, right, because they want to make an aggressive trade to the upside, right? But confirmation traders would wait for this bearish trend line to break. If this bearish trend line breaks, it's giving you a confirmation that, oh, this price wants to shift. It means this PUI, as price tapped into the point of interest, the previous zone that made a structural movement to the upside, it means for it to break it, it means yes, there's a power here. This demand zone wants to hold to take out this bearish trend line. So confirmation traders will now wait for the bearish trend line to be taken out. When they see this market structure shift to the upside, they will wait for a pullback, right? All you just need to do is to do your 50%, use your 50 when the market is now reversing towards the downside, right? Sometimes it's also a trend line breakout and retest confirmation, right? Sometimes it might pull back into the trend line for a continuation. So all you just need to do to catch the setup here is to use your fib levels from where the pullback started retracing to the downside, and so that you have a 50% level you want to buy from. Anything above, you do not want to take a buy, right? You can see sometimes market will create a structural inducement for you, which was this previous low, right? Then you're gonna buy at just the new POI market created, then you still put your stop loss below this level. You target to the upside. So this is one entry setup you can see repeatedly all over again, right? And on if you are seeing this move, say you are seeing this move on a 4 hours time frame, all you just need to do now to catch this confirmation setup is to go towards smaller time frame. Once you go to the smaller time frame, say 15 minutes, then you will see this break of structure from the previous low, right? You see this trend line that is moving like this, then you will now see the break of structure or the market structure shift to the upside, right? You see the market structure shift to the upside. So at this point now, you know that, oh, market just tapped into a what, high time frame POI, which you have marked, and it broke out from the trend line. This is what you'll be seeing on the this is what you'll be seeing on 15. It broke out of the trend line, right? The bearish trend line has gotten broken. Market will give you a POI on 15 minutes, right? It will give you a POI on 15 minutes. All you just need to do now is to wait. If there's a structural inducement here before this move, market will still repeat the same thing, right? It can start going bearish like this also. Once you see this move, it is repeating the same thing on higher time frame. Then you have confirmation to take your buy from that POI to target to the upside, right? It can start coming down like this. Still on 15 minutes, you just see the market ranging to take the buys, or you see the market create this move, the one you know of, the first setup we've been talking about. After the break here, might create this move on 15 minutes, moves induce like this, then come back and buy. You will see the setup here. But on a higher time frame, you might see something like this, and a lower time frame, it will repeat itself. So you can confidently buy once you see the setup repeating like this, just the way it repeated on the higher time frame. You take your setup using that 15-minute POI, you put your stop loss below, then you target all the sell-side liquidity like this. So you could see this kind of setup can play out. Always watch out for the trend. If the entire market is bullish, always watch out from the trend when the market is coming down, right? And of course, there might not be also there might not be a valid maybe say POI that have swept liquidity like this, but there might have been something like this rejection, then you have a break, then you have market coming down towards this region of previous resistance. Okay, this region of previous resistance, that is now acting as support. You can have market coming down to this region here. And how is the market coming down? So this region is now your POI. It's a previous resistance region on a higher time frame now, but the market can be coming down to this level like this. In a bearish trend line level, right? In a bearish trend line level, immediately taps this POI, then all of a sudden you see a rejection. Once you see this, it means market is trying to reject this former resistance region that was broken out, is now turning support, and all of a sudden market, right, takes out the trend, the bearish trend line it was coming down with. Once you see this move, you know that, oh, market has shifted. All you just need to do is to go to your entry time frames, 15 minutes, is to go to maybe 15 minutes time frame. What have I done? Okay, so go to small R time frame now, and you now watch for something like this or something like this for a continuation, or you can even see another this other form of entry, SMC entry setup like this. So at this point there might not be any valid POI you are seeing here, right? It's just a breakout and a retest. But what do you now do? You're now using the trend line and the rejection level, because this zone market has been rejecting from this place before, but now it used it as support. I think there's one currently going on a particular pair. Let's say other, right? Okay, other USD. Okay, so remember I've told you guys how to actually formulate how to do your top-down analysis before you take your entry. You want to know how to do that very well. Okay, so let's go to the weekly time frame first. See. Okay, this is a weekly resistance region. This zone has served as a resistance before on the weekly time frame. So let's basically go to the daily so see it clearly. Okay, I want to take this back. Okay, resistance, okay, resistance, then there's another resistance level at the top. This another resistance region. Let me take this out. Okay, so I want to look for a setup on this pair. Okay, this another resistance, another support level, and I think there's a mid-range support right here. Here there's a mid-range support level right here. Market's rejection from this zone. Okay, so if we go to the 4 hours time frame, okay, good, you can see this is the 4 hours. So we have market support, mid-range, resistance. Okay, so you can see what's happening now. Resistance, this area pushed market down, this area pushed the market down. Now market is coming into that zone again. It came inside and we are seeing a rejection. The last 4 candle rejected, this one is rejecting and it's turning bullish. So there might be a trade opportunity right there, right? There might be a trade opportunity for a buy continuation right at this zone on this particular pair. So what do we now do? Looking at it, that this area might be an area of resistance or support pushing price up. You can see price reacted from this particular order block and we see a rejection to the upside. Okay, we see a rejection to the upside from this particular zone, and price also, when there was an impulsive move here, a pull down, an impulsive move, a pull down, it formed a what? Trend line moving up, right? Trend line moving up, and this trend line has been taken out. When price tapped into this zone, it rejected and took out all the trend line liquidity has been taken out. Then it tapped into a bullish order block and we saw that rejection, which is also corresponding to regions on higher time frame. So let's say we go down to the 1 hour time frame, analysis time frame. Okay, now you want to look at the trend line that's bringing this guy down, right? You can see the last low that made an impulsive move to the upside came back down, has been broken. So market has tapped into a higher time frame of support level and took out the previous low that caused this shift to the downside. So now you have and closed above, so there is a market structure shift like this. So this is how you plot. You want to catch a confirmation trade, right, to the upside. There's a market structure shift here. You have seen a market structure shift on 4 hours, on 1 hour time frame, right, to the upside. So you have a swing high, a swing low, and a swing high. It means market has been rejecting from off this video. So your stronghold is you've gotten a support and market shifted structure. Okay, so if you go to the smaller time frame again, say 15 minutes, where you want to catch your entry, you just refine this, right? Refine this market structure shift very well. Now it's refined, right? This was the support level on 4 hours time frame where we plotted out that order block. Now a shift has happened. Now if you look at the way the market has been coming here, there's been a bearish trend line on 15 minutes, right, all the way from this zone to that touch, right? Market even broke out, retested, then before we saw a shift to the upside. So you can see this, the trend line that's been bringing market on 15 minutes to the downside has been taken out. So what are you now waiting for? You want to catch a trade. So based on our SMC rule now, what do we want to do here? If we catch any buy setup here, our target will be this trend line liquidity. That will be the first target we want to clear out, right? That will be the first target we want to clear out if the market will go bullish based on our analysis. So now you have a swing low, you have a swing high. Do you see how you need to take your time to confirm entries from high time frames? Now you just put your level here. It means your fib level, you have 0 to 100, 50% level here. It means you don't want to stick any buy setup here. No matter how you now go to smaller time frame and you are seeing buy setups, as long as it's inside here, you do not want to take it, because this was the low swing high structure that broke structure. This was a swing low, broke previous structure high. So if price moves up again, it will create the swing high. That's when you now move your Fibonacci to. But if of course if price is dancing around this area, this is your below 50%, so you do not want to catch any setup right there. So since you know that you have 50% levels here, draw a line. I can take out the fib level away. So all I want to do is to look for setups, any SMC setup that may appear right here. So but I'm not buying here. Now if I'm not buying at this level or any above this level, this can serve as a structural liquidity for me, right? And the closest POI to this structural liquidity is also sitting below this level right here, below this. This is also a 15-minute order block, point of interest for me, right? So I can use this, which is also corresponding to this previous push, this previous low right here. But do I want to just take a trade here and put my stop loss below this POI? No, it will be risky. Remember, we did the top down analysis. Price can still want to take this out, right? So what do I want to do, right? If I want to buy from here, since it's also below the 50% fib level, right, if I'm placing a buy here, I would want to put my stop loss basically even below this POI, below this previous low, right? This is where I'll be putting my stop loss, even if I found out my entry from this region. Okay, I'll be putting my stop loss here, then I'll be targeting higher regions, maybe, okay, of course, the first level where you have the inducements of the beginning of the trend line liquidity. Then of course, if you go to the 4 hours time frame and you want to even hold the trade much higher, right, you want to now hold the trade much higher, course you can even target the previous high, or you want to, for swing traders now, they want to even hold the trade up toward the level of resistance at the top based on what they saw on the weekly time frame. Because if price broke out from the mid range, where will be the next target? It will be the next target will be the next level of resistance on a higher time frame. So price might just whip from this region to this place, since it has broken out from this particular resistance region all the way from here. This was resistance, price tapped into it, push it up, right, broke down to the downside, broke to the upside, tap again, push down, tap again, push down. Now you've seen a breakout to the upside. So now maybe the tap for a continuation to this side. So if you catch the trade, it might be a continuation to the upside. So this is how you do your analysis in order for you to maybe see those those entry setups. So that is one. This is just one of them, right? What was I doing this thing before? Okay, this is just one of those setups. You need to know how to identify them from higher time frames then to the lower time frames. So backtest this entry model, right? Trend line, you watch for the trend line. Now for this model, basically this model, right, this model, we're not really looking for trend lines. All we are looking for is an inducement, a sweep of the previous low, a fair value gap, an inducement, a break of structure to the upside. The market comes to sweep out liquidity and a continuation. But for this entry setup, we are looking at trend line breakouts. Trend line, if you watch most of my trades, especially when I want to catch another flow trade, I use this very well. Trend line breakouts. Once the trend is broken and I've seen a break of structure below, all I need to do is, if price starts to retrace to the lower levels, I'll mark my fib levels, right? I'll mark my fib levels. When I mark my fib levels, I target the upside region. Basically what I do. Most times it plays out. Most times it plays out, except other things just come and scatter the setup. But most times, once you see the breakout of the trend, there's a pullback into 50% discount levels, you take your buy, put your stop loss below the pull eye, you buy to the upside. It will always go and take out the trend line liquidity, no matter how long it takes. So that is for day 14, guys. See you guys on the next video.